Welcome to another episode of Rebel Rock Money Talk. I am going to continue. So, last week on episode 21, I discussed what is infinite banking. So, it's one of the questions that I get the most. So, I did a video to kind of walk through what that is, the concept, what it means, kind of describing, what is whole life insurance as a product, and then what is the strategy of infinite banking. So if you'd like to hear more about that, learn more about that, please go to episode 21. Now, the next question that I get most often, or what I get a lot is, well, who really should have life insurance, right? Who should have whole life insurance, whether they're using the strategies like infinite banking or not, who should have it and how do they get it? All right, so I'm just going to walk through some of these questions and answer them. Okay, so who should get life insurance? Well, I know this is going to sound a little cheeky, okay, but honestly, I think anybody who is currently earning money or intends to earn any money in the future or intends to receive some money in the future should seriously consider getting whole life insurance. So whether you're a W-2 employee and you're, working your way up the career ladder, or you're already, near the top of that ladder, most certainly you should have some insurance. If you are a business owner, so you have a business, whether you have partners or not, if you have any kind of, debt or liens or, equipment that's been financed but hasn't been completely paid for, anything like that, you should strongly consider having life insurance if you're an investor. So you're someone who's got, money invested in different things. Investment means that there's some level of risk that has been introduced. So it means you could potentially lose your principal and then some, right? In some cases, particularly if you have investment partners, just like with business partners, you definitely want to have some life insurance that will sort of cover your portion in the event that something, terribly wrong happens with those. And then I know this also sounds cheeky, but I say anybody with a pulse and the ability to pay or have someone make those premium payments for them should have it. And the reason that I say that is because there's really no safer place to put your money than a whole life insurance policy. Most of us, we just intuitively know to put our money in a bank or credit union. And I'm not saying to not put your money there, right? But you maybe have a little bit of money there, but the bulk of your savings, the bulk of your capital, the money that you really want to make sure is risk free, you want to have full control, you want to make sure it's fully liquid, and you want to be able to access it whenever you want. You really want that to be in a whole life insurance policy. Okay. So it's the financial vehicle that can give you the ability to control and mitigate things like ongoing fees, right? This is something that you will um, have applied to your accounts if you have, again, 401k or any type of managed account is going to have ongoing fees. So this might be what might be disclosed to you as, the 1% of assets under management that your, stockbroker is charging or your advisor is charging. This could be the fees that are being charged on the 401k plan at your employer. You probably have no idea what those fees are. They should be disclosing them to you in your statements, but usually they're kind of buried in the fine print and hard to find. There's definitely some that have been better about being transparent about what the different fees and costs are, but there's many of them. So if your money is in a whole life insurance policy, it's not subject to those ongoing, kind of hidden secretive fees. And then, of course, there's tax advantages. And I'm not going to go into all of these because I have previous podcast episodes where I dive deep a little bit. But um, the tax advantages. One of the key things to think about is your premium payments. Once you're putting them in here, these are after tax dollars. So you've already dealt with the tax consequence today. You're not dealing with the unknown future tax consequences. Nobody knows what's going to happen with taxes, but it's really hard to believe that they're not going to go up. And I'm talking about income taxes specifically. So it's hard to believe that income tax rates will not go up, especially when we look at the trillions of dollars that the country has printed in the last 12 months to just keep the country propped up, right? We print that money, but it has to get paid back some way somehow, right? It's not, you can't just keep printing money. which leads to the second one, inflation. So if we just keep printing money, it actually is devaluing the dollar. So your money will be kind of insulated from that as well. And I also have you think about it in this way. If your money is sitting in a savings account at a bank, and it could be earning 0.1% or it could be earning 1%. Okay, let's just say it's earning 1%. But depending on which scale you want to use, the inflation rate right now, if you use, consumer price index or whatever rate you want to use, it's going to be anywhere from 2 to 4%. So your money sitting in a bank or in a money market account is actually costing you money because you're earning hopefully 1%, but the cost of living is actually increasing by 2 to 4%. So at the very least, you want your money to be parked somewhere that's earning at least 2 to 4%, right? Keeping up with inflation. So that's another reason why you'd want to consider putting your money into a whole life policy. The other is opportunity cost. So again, you can think about over the course of years, putting your pre-tax money into a 401k plan. Think of how that money is kind of locked up and you can't really get to, I mean, you can, right? You can take a loan with some conditions, right? There's a limit to how much you can take. They're going to, structure how much you pay it back and when you pay it back. But if you try to withdraw it, there's a penalty. There's just all these things that you have to consider. If you get terminated or you leave that employer, or you want to leave that employer, but you feel like you can't because you can't afford to pay that loan back, you're just kind of stuck and restricted. So if you're putting your money in there as opposed to redirecting those funds after you've paid taxes on them into something like a whole life insurance policy, you have so much flexibility to do with those dollars whatever you want, right? You can use them for retirement. You can use them for your college, for your kids' college. You can use them to pay off your own student loans. You can use them for, investing. You can use them for whatever you want. No one's telling you what this dollar is allowed to do. So the opportunity cost is, what is it actually costing you to park your money into vehicles where you have restrictions and limitations and penalties and unknown future taxes versus parking it into a vehicle where you have, full control. And then lastly, knowledge, right? So you're going to hopefully work with someone, could be me, but you're going to work with an experienced life insurance agent who can really design a policy that works for you and school you, educate you on how to use it, it's not just for your loved ones when you pass away, but how you can use it while you're alive. And you continue to learn, really how to learn to leverage this particular portion of your portfolio. Okay, so for all these things can be managed and controlled using whole life insurance. And so this is why I say anybody, if you ever intend to have money, you should have a whole life insurance policy. Okay. So anybody with dependents or partners. So if you're a parent or a grandparent, if you are an adult taking care of your parent who is maybe sick or elderly or has a condition, if you are, or maybe they're just retired and living with you, okay? But if you have responsibility for them, you should seriously have consider having life insurance. If you have a partner and who you're taking care of, who's sick, it could be your spouse or your partner. You want to make sure, excuse me, that you have life insurance so that you are able to have money for them in the event that you pass away. If you are taking care of someone who is not able to earn enough money to take care of themselves, you definitely want to have life insurance. So similarly, if you're a caretaker of someone with special needs, whether they're a child or an adult, obviously there are costs there. And if you were to pass away, what happens with them? How do you fund their ongoing care? And so I touched on this earlier, but if you're a business owner, especially if you have business partners, if let's say Bob is a business owner and he has a partner, Joe. So Bob and Joe have been business partners for several years. Things are going great, but all of a sudden, Joe has a heart attack. Now, Joe is married to Susie. When Joe passes away, does Bob all of a sudden become business partners with Susie? Does he want Susie to start making business decisions? Does Susie want to be part of the business? Who knows? We don't know what any of those situations are. But if they had put together something called a buy-sell agreement, It would clearly state and identify, what would happen in the event that either partner, when they pass away, what happens. And most people will put something in place that says, okay, well, when Bob passes away, this insurance, this insurance policy will be in place, and so uh, Bob will be able to buy out Susie, and so Susie's, Joe's family, his estate, will get their portion of the business, and Joe can continue to run the business himself with full ownership and not having to worry about, Susie wanting to have a say. Okay, so hopefully that wasn't too confusing. But that's one reason why a business owner would want to have life insurance. And then, as I mentioned before, even if you don't have partners, if you have any type of financing or outstanding loans, you would want to have a policy in place that can cover any outstanding debts that would get, basically they would put a lien on your estate. So you might as well just have some insurance to cover that. Similarly, with an investor, if you have investment partners, or if you have liens or loans tied to your investments that you're going to still be liable for, or your estate will be liable for, if you have an insurance policy in place, it can take care of that. But also, even if it's not a matter of you just, passing away, if, like I mentioned earlier, if there's anything that goes wrong with the business, anything that goes wrong with the investment, and you basically lose all the money you put in, at least you still have that money in your cash value. You didn't, it's not money that's completely gone, right? Your money is still there. Now it's still, if it was money that you had borrowed, it's still going to be outstanding. But worst case scenario is that loan is outstanding for some years. And when you pass away, the insurance company will at that point take the portion that you owe to them, and they'll pay the difference to your loved ones. Okay. But anybody who has any kind of dependent or partner should have whole life insurance. If you have an outstanding mortgage, so if you just bought a home, or even if your home is 10 years old, if you still have a mortgage on it, you probably want to consider having life insurance, because in the event that you pass away, you'd want to make sure that your, loved ones can stay in the home, or it's not going to just be, again, a lien that's going to be against your estate, that, you would have insurance to be able to buy it out and pay any expenses as needed. Okay, and you can outline in the trust how you'd want things to be taken care of. Okay, and then lastly, for those who specifically want to work with me, I am only licensed in the US. Okay, so anyone who is wanting a policy in the US, you need to work with a agent who is licensed in the state where you reside. So whether it's a personal residence or business residence, if there's a residency there, then we're able to assist. Okay, how old do you have to be to get life insurance? Well, you have to be at least 15 days old. So yes, a baby can get life insurance. Okay. And so you might ask, well, why would you do that? Why would you get life insurance on a baby? Well, life insurance in general is a long-term benefit, right? It's a financial vehicle that the longer it's in place, the better it works for you. And so obviously then the younger you get it, the longer it's going to be able to work for you. Okay. The other important factor is the fact that typically for most people, the younger they are, they're their healthiest when they're their youngest. And so if you can get a policy on a baby or a child when they're typically, as healthy as they're probably going to ever be, you can also get what's called a guaranteed insurability option. And so they can get multiple policies. So this will be a small policy. It might be something that, you might only be putting a few hundred or a few $1,000s a year. But over time, obviously, that policy is going to grow. And as that child grows, when they get to be, to an age where you would like them to take over the premiums, which is what a lot of families do, they have their child take over the premiums at, say, some of them do it at 16, some do it after they graduate from college. There's different, every family is going to be different, but they have that child take it over. But after all those years, imagine after, 16, 18, 21, 25 years, how much money's been able to accumulate and grow in that policy in that time. That child is really set up to kind of begin adulthood with some savings, with some cushion. Okay. So the sooner you're able to get a policy on a person is usually the best. Obviously, you're going to get the most bang for your buck, as I say, in your 20s and 30s. And I say that just because, again, in your 20s is when you actually typically start working and earning, and starting to have more disposable income. And so you can start putting more away into what you would consider your savings. So you can put more away into your policy. And so it's also going to be, a lower cost to insure you at that age because you're still young, right? You're still young in your 20s and 30s. Now, there's definitely people who apply in their 60s and 70s who are able to get policies. But remember that primarily, two of the biggest factors that have to do with you being able to get life insurance is your health and your age. And obviously, the health is important because the insurance company, again, it's just actuarial science, right? They're looking at the probability, like how close are you to mortality? So for most of us, the older we get, the closer we are to mortality. It's just a fact of life. But also they're going to look at your health. Do you have a history of health issues? Does your family have a history of health issues? Now, they're going to consider all these different things. It does not mean that you cannot or will not get a policy. You very well might be able to get one. You just may have some conditions, like they may change the rating that was initially submitted with your application, or they might say, they might alter the amount or something like that. There may be something that's changed, but they basically will come back with an offer, and then you have a chance to either accept it or not, right? So there's a whole application process. Also, keep in mind that whole life insurance is in place until you reach age 121. That is going to be lifetime for 99.99% of us. Okay, so it is there for your whole life. I mean, it really is that whole time frame for that money to grow and work for you. And then the bonus is that when you pass away, there's money there to work for your loved ones. Okay, but if you were to reach age 121, like you're still alive at age 121, God bless you. But also, the insurance company will essentially, the policy will endow. So, what that means is it'll write you a check at that point, and you will get that money, and that is for you to spend in glory. Okay. All right. So, how do you qualify for life insurance? This is the other question that I get a lot. So, as I mentioned, there's an application process, right? It's with most companies now in 2021, it should be online. So you are simply going to complete this online process, this online form with your agent. So let's just say you're working with me. So I will send you a form to collect some of this personal information ahead of time so that when you and I sit together to complete the application, I've been able to pre-fill as much of it as I can. And then you will provide me your social security number, and just we'll go through and you will answer some questions. So the questions are going to be related to, your health, right? So number one, we need to get your doctor's information. And, yes, we obviously need your primary care physician, but if you've seen any doctors in the last 5 years, they're primarily focused on looking at the last 5 years of your medical history. So if you broke your leg and had surgery, that probably wasn't your primary care physician who took care of you. It was probably a surgeon. So we need that surgeon's information. Any doctor that you've seen in the prior 5 years, provide that information so that we can submit it with the application. If you have had a history of, a chronic disease or a serious disease or, anything like that, we would want to know. We want to provide this in the application. Again, these things do not mean that you will not get a policy. It just means that the underwriter they want to be able to consider all of these different things. So they want to know, have you, maybe you've had cancer, maybe you've had surgeries. What prescriptions do you take? So be prepared to have your prescription with you or know your prescription. So the name of it, the dosage, we would need to know that information. And activities, are you someone who loves to do bungee jumping? Do you smoke? Do you like to, chew on marijuana edibles? I mean, all of those things are things that we need to know. Okay. You're going to have a pyramid exam, which is basically meeting with a nurse. They're going to take your blood, urine, they're going to ask you some questions, but that's an important part of this process. So once we've gathered and then we need to understand if you currently have life insurance, right? You may have life insurance at work. We still need to know that. We need to know which insurance company it's with and how much. Is it 1 times your salary, 10 times your salary, whatever that is, if you can find that out, because we need to know. The reason why this is important is because just like with anything, when you insure it, you can't well, you shouldn't insure it for more than what it's worth, right? So let's say that you have a Honda Accord, but you want to insure it for $1 million. No insurance company is going to insure your Honda Accord for $1 million unless it's got like diamond encrusted steering wheel or something like that. Okay, but a typical Honda Accord is not valued at $1 million, so it can only be insured up to what that market value is. So it's a very similar process with when it comes to life insurance. They're going to consider, like your income, your investments, your assets, your net worth, and your age, right? The time horizon there. And so there's a kind of a formula that they use to determine your human life value. So there is an amount that you cannot be insured beyond. So even though you may think you have $1 billion smile, it does not mean that you can necessarily be insured for $1 billion. Okay. So we need to know what existing insurance coverage you already have so that you're not going to get overinsured with this particular request or this application. So all these things, like I said, as well as a pyramid exam, which I forgot to list on here, but the pyramid exam is also important, and that's only for 18 and up. You don't have pyramid exams for kids. But once you've provided all this, so once we've completed the application, I will submit it. I will order your pyramid. You will schedule that, appointment with a nurse. You will get that taken care of. The underwriter will get all this information, and he will, review and make an assessment, and he will come up with an offer. So typically, well, in most cases, the offer will come back as, with what you submitted with, what we submitted with the application, but it may come back with questions. He may come back with a change in the rating. It may come back with, okay, approved, but for a lower amount. Like there's different things that could happen in the offer. So once I receive that offer, I will reach out to you and we will discuss that offer, and you'll decide to proceed or not. And if you would like to proceed, then we will electronically sign it, and then electronically you can make your premium payment. So that's at a very high level what the process is. So that's how you would check to see how you qualify. The underwriter is going to review all the information that you submit. Now, please keep in mind, depending on which insurance company you use, and depending on, how thorough or how complete you were in providing the information for the application, how long it takes for the doctor's offices to provide your medical records. That truly is the longest, most painful waiting part, most painful part of the process is waiting for the doctor to provide the medical records, because they typically don't prioritize this request. Okay. So we are typically at the mercy of the doctor's office to provide this information. And then, of course, once the underwriter has provided the offer, it will depend on how much time you take to review and accept and sign and then make your premium payment. So, there's all those different steps in between. So it could really honestly be anywhere from 1 week to 3 months. At least that's been my experience. It depends on which company you use and, how proactive you are and your doctor's office and others are in the process. Okay, what company should I get my life insurance from? Okay, I know everyone hates this answer, but I say it depends. In most cases, it's going to be what we're going to cover in a second. But for some people, if you are just looking for something like, say, like a final expense policy, right? It's just a small policy to cover funeral expenses or something like that. You may not need to do, you may not need to be as particular with the company that you're using. But in most cases, and there's probably some other scenarios, but in most cases, I'm going to say to you that you should consider using an independent agent. And it's not at all to say that a captive agent is not going to be able to provide you good quality service. I only say it just because, well, obviously I am an independent agent. And what that means is I am not captive to any one insurance company. So I have relationships with multiple. And so I'm able to offer you, I'm able to look at the products that I know the companies that I work with offer and make the best, decision for you, as opposed to if I was a captive agent, I really can only use the products that are provided by the company that I work for. So, there's pros and cons there. So I only work with mutual life insurance companies. And if you're not sure what that means, is there are mutual life insurance companies and there are stockholder companies. So just like with the regular, market, if the company's focus is on pleasing their shareholders, then their focus is on profits. And that's okay. But in most cases, when you're focused on profits, you may be willing to enter into some level of risk to get that higher return. And what that means is it could put the insurance company in jeopardy in the future. I like to work with mutual life insurance companies who have been paying dividends consistently for 100 years or so because they have proven that they've been able to manage their money, manage their expenses, be able to pay out the death claims for all those years. They've been able to do all of that and still, stay in business. And obviously, as a policy holder, you're going to receive bigger returns or bigger dividends than you would if you were part of a shareholder company because they're going to pay the shareholders before they pay you as a policy owner. Okay. So I'm looking for companies that have demonstrated that they are able to manage their costs. They're able to, pay out their death claims. They've been around. They've been able to pay dividends for 100 years plus. That's who I like to work with. And also keep in mind, your agent may bring to you a policy designed from a company that you've never heard of. But if it's a reputable professional, they shouldn't be presenting you with a policy from a company that you don't recognize. If you don't, you should be able to research them and look them up. Well, first ask them, why did you pick this company? And they should be able to explain to you why. Okay? But don't panic if it's a company you've never heard of. Okay? All right. So in general, just a quick, kind of recap as to why life insurance is so important. This is how I view it, right? This is the iceberg. I like to use this iceberg analogy, but everything that you see below water is the huge chunk of ice that you can't see at all. That's the foundation, right? That's the solid foundation. That's where your liquid savings is that is risk free, it's protected. You can get to it, you have control over it whenever you need to. It's protected from, fees and taxes and inflation. Like this is that safe, protected principal money. Everything above the water is what's exposed to the elements, right? This could be your investments, this could be your business, this could be your job. This is anything that you only have so much control over, right? Because you could lose your job, right? You could get fired. Your job could be no longer relevant. Your company might go out of business. If you're a business owner, if look at the time of COVID, you may have had a very successful business for decades, but then something like COVID came along and it wiped you out. Maybe you were an investor and you took a chance and you were investing in something and you lost the investment. So again, in any of these scenarios, you're braving the winds above the water, but at least you still had that solid foundation that you could tap into if necessary. Okay. So really, this is kind of the analogy that I use, but to me, whole life insurance really is the rock solid foundation, it should be, of your whole financial portfolio. Okay. So quickly, benefits, we just kind of touched on it. Full control and access. It's a personal private asset. So this is something that is not, the IRS doesn't have their grubby little hands in it, right? You're not having to file a 1099 every year with your taxes. They're not going to require you to have, minimum distributions when you reach age 70 and a half or 72. They're not going to say, well, you can only use these dollars for this and use these dollars for that without, and if you don't, there's a penalty. You don't have to deal with that, right? When your money's in your whole life insurance policy. Also, again, you can leverage the money that's in there. It's really, you're building up equity, if you think of it that way, building up equity in your policy so you can, borrow and use it for any reason. There's no loan application form or credit inquiry or anything like that. And then you can pay that money back at the schedule that you choose, right? Obviously, they're going to charge you an interest rate. There's a loan interest rate. There's a rate to borrow that money, but it's very reasonable. And you choose when you want to pay it back. Okay. So When your money is in the policy, it's growing just like, it's just sitting there, but it's growing and it's growing and it's growing year after year. The dividends are getting added to it each year if they're declared. Remember, dividends are not guaranteed, but if and when dividends are paid, that's getting added to your cash value plus the guaranteed, growth that's already built into your policy. That's getting added every year. Even if you borrow it to use that money for an investment or anything like that, that money is still sitting in there because you borrowed against that equity. You didn't take that money out. Okay, so these are all the different reasons why whole life is such a great vehicle to protect you from all these different things that can really destroy your wealth over time. So that was those quick questions. I hope it was quick, too, that I get a lot, but I wanted to be able to provide a video or a podcast episode to kind of walk through and explain the different types of questions that I get. So I hope that this was helpful. If you have questions about life insurance, please don't hesitate to reach out. My contact information is, in the show notes. Also, you can just go to rebelrockwealth.com and schedule some time or reach out. All right. Thank you, everyone. We'll talk soon.